Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. I don't know if it. There you go. I don't know whether I was going to be able to do it. We really should have this pre-recorded event. In fact, isn't that why you were originally hired to do that? That's why I gotta go. Bark, bark, bark. You can already hear it. It's like the porch. This is a Portuguese chicken. Bark, bark, bark. Oh. The chicken's going, I'm a vaga. Don't call me a chicken. I'm a vaga. Actually, I had chicken last night. Those kebabs. We had our TRI meetup. I think, am I on camera? I don't know. Maybe. Yeah, I am. So, hi, everybody. We had the kebabs on the barbecue. Man, how much vodka did we barbecue last night? It was like half a cow, wasn't it? It was half a vodka. It was a lot. Anyway, so hello everybody. You can probably hear my voice. I've been yelling Portugal every chance I can get. So now my voice itself is waning. It'll probably take a month or so to get it back after I'm back in Vancouver. Anyway, this is our Broiler Chicken Show reporting in from the TRI Meetup 2022 in Nazaré. Do we ever get to Nazaré? Oh, yeah, I forgot. We're in Nazaré or Peniche or whatever the hell it's called. Anyway, welcome back to the Frivolity. I'll try as hard as I can to give you some value here today. The good part about it, of course, is that, as you can see, the breadth indicator, and if you subscribe to the breadth indicator, basically this is a cheat sheet for the stock market and actually really crypto markets, all markets really. And as I was trying to explain to these guys the other day, this now with this breadth indicator operating the way that it is, this is almost like back in the day you used to have like Mario Brothers, and you used to be able to like enter cheat codes, left, left, A, up, down, left, right, B, A, C, D, and then it would unlock sort of God mode. And then, you were basically immortal and you could just walk through the whole game. And I'm telling you, man, this breadth indicator, that's exactly the first thing that comes to mind when I think about this. And hopefully, especially if you're a site subscriber, all you sort of lurkers, maybe this will give you incentive to join the site and maybe even subscribe to the dashboard. But interestingly enough, I was actually explaining this to a new site member here just the other day that you can see stock market on the medium term is minus 78 and on the short term minus 56. Not quite oversold. So actually, I could see the stock market work its way a little bit lower here over the next few days. Interesting though, as another quote unquote risk asset, crypto minus 70 on the short term. That is starting to approach oversold. I like, minus 75, minus 80, somewhere in there to give me that serious short-term oversold. And then notice on the medium term, ooh, minus 90. Now that is oversold. So kind of like it's fascinating how if I was back at my post, I'd show you the risk on versus risk off assets. I think that the stock market and crypto are highly, highly correlated now. And well, that's fine. So, oh, okay, yeah, that's a good point. Actually, that's an even better point. So the country funds themselves, as a sort of proxy for world equity, are actually looking extremely similar to the S&P 500 as a proxy for world equity. But as just pointed out there, and I kind of slipped by me here, crypto actually is not correlated at all well, right in the short term with this. If anything, I don't know. And actually, this will be a question for Stuart: is does this update through the weekend? I don't know. I noticed that the last date here it says is 9/16. So we'll keep an eye on that as the platform sort of breathes here over the next few months. I would like to take this product prime time come the end of November into that big selling window that the Americans love. What's it called? Like Cyber Monday or something like that. So anyway, so good point, Josh. Crypto actually not very highly correlated with equity right now. World equity, On the short term, not quite oversold. It actually looks like world equity could go a little bit lower. Maybe we find that in that environment where world equity in the short term does get oversold, we actually see crypto come off here a bit. Interesting how crypto, though, on the medium term has jumped up quite a bit. Not even remotely oversold. In fact, even not necessarily overbought, but it looks like it's had a bit of a shot in the arm here recently. So that's kind of an interesting data point. In fact, I wouldn't even mind. Let's see how that. And this is a cool new feature now on the site is you can actually see how the histogram has behaved over the past few days. So you can actually see the evolution of the histograms as we go. So back there on the 9th, it looks like we had a little bit of an overbought condition in crypto. Oops, let's see, where was 9th again? There it is. Oh, geez, this is the one thing that's a bit difficult for me on an Apple. So 90, what does that say? 93? Yeah, 93 on the medium term. 80, what's that? 65, let's call it, well, 65 and a half on the short term. It's actually not really a trade signal there either. Interesting at this point, you can see lots of mixed messages in the market. Some up, some down. If anything, I kind of like the fact that we're actually starting to get a little bit of maybe let's call it what are we going to call this? What's the word I'm looking for? Cocoa beware. No, that's not it. Confluence, something along those lines, where equity all seems to get washed out. And is there any sort of particular event coming up here shortly that maybe we might even have a sell the rumor, buy the news scenario? And I actually think it's everything to do with the Fed. So let's see if I can remember how to use Andre's computer. Today is the 18th, and we have the U.S. Federal Reserve meeting on the 22nd or 21st, if I'm not mistaken. I think this calendar, Monday, Tuesday, Wednesday, yeah. So it almost looks to me like the whole world stock market, equity markets, everything is tanking into that September meeting. And I even have heard people talk that maybe the Fed even raises 1 full percentage point. And maybe that's where you're going to get your sort of sell the rumor. And then it turns out the Fed only raises 75 basis points, what they said originally. And you get actually a relief rally out the other side and buy the news. So that's what I would be watching for. Interesting how crypto here, though. There's a little side effect. Of course, big event here recently. We had the quote unquote merge. I think that's what they called it, right? Where Ethereum did its thing. And by all means, if you want, actually, this site's turning into a pretty good news repository too. So on the dashboard, sort of the more advanced version of the site, sort of behind the paywall, all that kind of talk. We have a pretty good collection of news sources here. And as I was getting ready for the broadcast today, I was just perusing through. And you can see, I think this is everybody over at the Wall Street Journal. I think that's what this is. They were all excited about the merge. Did find one line in here that actually surprised me, but it just goes to show how completely dominated these news outlets are. This one line here, and it's a total load of horse shit. The shift, known as the merge, will save huge amounts of energy. Yeah, I can understand that. And prevent carbon from being spewed into the air? Like, what the fuck is that? How can they even make that claim? I don't like that at all. That's just horse shit. So I've told you before, I've actually heard the argument that POW could actually work at reducing carbon being spewed into the air. Or if you have, things like, especially in northern Canada, where you have a lot of oil industry and they just burn off natural gas into the atmosphere. If you actually captured that energy and used it to fire electrical generation, you could technically mine Bitcoin with that. And then with the coins that you mined, you could, fund things like carbon capture technology, with that earned money. So I hate statements like this. And it clearly shows that this media outlet, whoever these people are, they are basically trying to convey a very specific message to the public. They're probably owned by some one percenter who owns a shitload of Tesla stock or something like that. And they really want to ramp up this whole, oh, the end of the world, global warming horse shit argument. And the problem is that usually what ends up happening in this world I've found is that if you punish people, nothing changes. So, like for instance, why do people still speed on the roads? They hand out speeding tickets like there's no tomorrow, and yet people still speed. So clearly, punishing people doesn't work. If you incentivize and you say, look, if you don't speed, we put a monitor in your car, then we'll give you a huge reduction on your insurance premiums. Woo! People stop speeding really quickly. So that if they really wanted to affect climate change, what they would probably say is, why don't we incentivize everybody? You get a tax credit for every tree that you plant. There will be so many bloody trees planted. Global warming issue would disappear instantly, and we'd all live a better life. But of course, we have to understand that things that happen in this society are happening because they serve certain people's special interests. And I mean, like Gates wants us all to eat insects. What's the odds are that he's probably heavily invested in insect industry? So anyway, that's just conjecture. Anyway, blah blah blah. Hope you enjoyed that little rant. Actually, it was relatively polite. It wasn't that bad of one. Okay, so I'm so enamored, isn't it? It's fun. Joshy was the Joshy. Actually, and I think that's going to become a word in our vocabulary. I'm feeling very Joshy today. But Joshy was sitting here going, geez, I could just watch this all day long and going back and forth, back and forth. It's so much fun. But God, I'm so enamored by this. I'll probably sit and play with this for hours on end when I'm back home. So, way to go, IT team. Sjord working diligently, actually with Joss. You guys worked really hard to bring this off. And now Sjord is really cool. Is working with Johnny Tastic and the dynamic duo. And actually, I don't know Johnny's tech partner's name. Anyway, they had a great meeting with Sjord while he was here in Portugal, and I think I see a lot of potential for that relationship going forward. Super stoked for those guys. All right. Of course, today is where are we here? It's near the end of September, which means get back to school. Usually, these school programs, we like to start them just like almost all public school in North America, first week after Labor Day. Because we had the meetup this year and I was on the road, we kind of pushed things back a week. Today is basically the last day before the marketing. Well, marketing's not the right word. Sort of the official introduction week. I think that's probably the best way to describe it. Those people that either are on the reservation page. There we go. For this upcoming term, if you wanted to register for this term, we asked you to come in and throw your name and address on or email address on here. You see that once this broadcast finishes, David Eisner, sort of our official school marketing whiz, will take over and he will start talking to those people that are interested, encouraging them to get signed up on the school. I think you all know how the game goes. So here we are, September 18th. And what that means is before we get going in earnest with this, we have our raffle. Whose life are we going to change for the better today? All free of charge. Ironically enough, I've often told people that actually you don't see the calendar. Isn't that interesting? Do you see that? I'm pulling up the calendar and I'm trying to show people the dates, and actually they have no idea what the hell I'm doing. So that was kind of silly, eh? Oh well, no big deal. Um, Point is, today, and you can see the timer, it is almost time for our raffle. And actually, it's really cool. The boys put the wheel together before we got going here in earnest. So it's all ready to go. We will spin the raffle at the top of the show. And let's see if we can change somebody's life forever. And actually, it's really cool. Like some of our site OGs, David O, for example, is our Adam and Eve aficionado. Who was it who was asking me about Adam and Eve? Was it you guys? No, somebody was. Yeah, and they couldn't figure it out for the life of them. And then I explained it to them. They're like, "Oh, now it all makes sense." So David loves his Adam and Eves, and of course, heads and shoulders that turn into megaphones potentially. And he actually won the very first raffle we ever had at TRI. So obviously, we are making a positive difference in this world. Super stoked. So anyway, there is the wheel. We will spin it at the top of the show or the bottom of the show, whichever way it is, and we'll try and change somebody's life. Talked a little bit to dashboards and a little bit of breadth. FYI, I will be doing more sort of tutorial walkthrough videos now that we actually have this data up and running with the histogram, and I can show you how the histogram changes over time. So look forward to that. Probably the best place for you to start all of your research at any given point in time is actually this weekly commodity trend survey. And the irony of it all is that you can see buy setups. This is where the market is substantially below the 52-week 50% level. And we all know Mr. Gann likes to see the market rally back to 50% rules on a regular basis. And the market is spitting out a moving average cross on the weekly charts, 13 EMA crossing above the 30 SMA. You could, if you were so self-motivated, great Del Moody kind of guys, you could play around with different moving average relationships. The module in our level 2 program, of course, is all about that concept. 13 EMA, 30 SMA actually corresponds rather nicely with a 9 EMA, 18 EMA relationship, which is actually like an institutional timing signal. They're very, very similar. So, bottom line here is Brian and his crazy setup. Keep in mind, and actually, I had a great conversation, and Josh hopefully will help me upload it and promote it on the interneting. We had one student who is a vet who did an interview here today with us in Portugal. And he was saying, and I have to reiterate, I thought it was an excellent comment that Brian has his crazy system and the way that he looks at the market, his moving averages and all that. And I don't really expect you all to blindly adopt my tools that I use. If anything, what I want is I want you to understand basically the process, to understand how I use the tools that I like to validate trade location, indicator confirmation, price structure, go. None of that changes. But, those, as you go through the education program, as you go through, um, learning about yourself and learning different indicators, you're actually going to stumble upon indicators and signals and trade location tools and market structure tools that actually speak to you. So Brian's a weirdo. You're not going to run it. In fact, actually, there's only two other analysts that I know of that actually like to use the 13 period exponential moving average. And actually, most humans themselves, they don't like the number 13. It's like an evil number. So, Brian's a weirdo. Yeah, we can leave it at that. I love this system. I've used it for a very, very long time. And the moving average relationship coupled with that relationship of where the market is relative to the 50% rule, it makes it really easy to find buy and sell signals in the market. And you notice we did have a couple cryptocurrencies there a month or so ago start to spit up trade setups. So like, all right, these guys are in the zone where if it bottoms and W's out on the daily chart, it's okay to pull the trigger. And you notice that those potential bottom setups, they've evaporated. There's really nothing that I would consider a screaming buy here in the stock market or the crypto market or the commodities markets or the bond market right now. which in itself, ironically enough, is actually a very odd situation. But really, and actually, another interview that we did, but I don't think I got him on tape saying this, but I asked him to repeat it to the whole group of new students that were here. He just simply said, "Look, at you. We can't do anything in the market until Caesar has decided it's time for us to go back and risk in the market." And actually, I gave a challenge to everybody. Can you understand what Raph was talking about? And this is Caesar. So his name, of course, right at the moment goes by the initials JP. So hopefully now you understand who Caesar is. I'm sure you're probably not too difficult to figure out. What is interesting to see reading through the news articles that the strength of the dollar is now biting into the world economy. And this is exactly what I predicted was going to happen. I mean, I don't really like the whole, let's get into the business of crystal ball reading and stuff like that. But this is the whole sort of fear, greed cycle concept. So it's interesting to see how now, and a couple of years ago, I was pounding this, very typical. Brian's usually right, but Brian's usually early. You can actually see the dollar is now starting to bite into these world economies seriously. Be interesting to see if many of the third world nations can actually keep their head above water. Sri Lanka, of course, probably on the margin there, even of third world nations. Boom, down she goes. I understand that Japan right now is reeling. I think the currency's at like a 25-year low. And it was beautiful to see even the Chinese yuan is getting its ass kicked right across the board. So, great analogy. It's what I've been looking for forever. And the irony of it all is that I don't think this thing's going to slow down at all. 877s, you can see, are sitting right now up there on this particular chart. And this is just off of this little consolidation. Actually, I probably want to do this one. Let's see what happens if we go there to there. Something like that. Just eyeball it. So 4669 is where this sort of 107 area, and you can see there's a pretty good fight here. Where's that 877 now? Whoa, all the way up there. 122. So there's clearly no top in place here. We were wondering a week or two ago when the market started to break. You can see, in fact, so this is a really good analogy of Collins' pump chaser zone. And ironically enough, if you have a really strongly trending market, just simply using moving average checks, if you want to learn something new and you haven't heard this before, get your journals out and journal, journal, journal. You're not necessarily going to go long or short the US dollar index. I don't really like that trade. What I would prefer you do, identify the trade versus identify the trend in the US dollar index and then drill down to your personal currency of choice and your hunting setups. But if you were trading the dollar index, this is where, we have a moving average system here. You can see everybody turned bullish right around September last year. That's interesting. One full year ago. And moving averages are very, very bullish, all painting very bullishly, maybe getting a little too wide. So we got to keep that in mind. But notice, check of the fast moving average, that was your entry window. And we just went through another one. Check of the fast moving average, that was your entry window. And of course, as I said a moment ago, that also too was a call-in pump chaser zone. So you could argue from trade location, look at Brian, I'm trying to get in on this runaway train, higher highs and higher lows to find a bull market. I'm going to wait for pullbacks. I'm not going to chase. And this is exactly what Colin teaches his whole crew in the cryptocurrency space. And the irony of it all is just really no difference. It's exactly the same as hello. BE on SL nil algo. Oh boy, something just happened there. Should we tell Andre that his algo just blew up? I don't know. Anyway, there is 38.2. There is the moving average check. There is a Wyckoff check. So ironically enough, that's actually kind of a cute little trade location to try and sneak in on the trend there. You want to let this thing bottom out. If we go like, let's say down to like an hourly chart, my hunch is down in that level. Yeah, there was probably signs of W's. Hope frame that entry. Let's see what we got here. Where is that 38.2? Okay. Maybe it actually doesn't show on this one. Let's go back to the daily. And oh yeah, because I did it in the previous cycle. That's why. Sorry, everyone. Let's go 6 hours. So that's there. Yeah, okay. So there's the 38.2. And what do you think the odds are there was some sort of divergence that developed on that tag? I bet you're pretty good. So you can see rising MACD histogram, even rising Willie. What did Willie get? Stupid? I can't tell the numbers here. But what I would just simply say is there is that pullback and Wyckoff check. Let's see, was it a Wyckoff check? Yep, against those highs. If you wanted to get in on the bull, it looks like your setup was right in there. I would probably say, so as I had said there just a moment ago, Mr. Powell is driving the bus, no doubt about it, in the world economy. I wouldn't be surprised, to be honest with you, that there's actually a little bit of a pullback. And so that's probably why I had this study up here now. If we were thinking about pullbacks, believe it or not, a dip down into this area on this US dollar index is not out of the question. And I could also see that if we go, let's move this over here. And then we go like so. AB. And clone that. CD. Yeah, look at that. So actually this ABCD would take us down against this trend line, and my hunch is probably like a reload zone of just this particular range. There to there. Oh, come on, you. There. Oh. No. There we go. And then we go reload zone. Boosh. And then we're going to have to go backwards and flip that around. Oops. And we don't want to do that. Oops. And it's gone. Oh, sorry, Andre. I just sold all your Bitcoins. That would suck. Okay, reverse. And there you go. So really cool. Notice good old Mountain Man and that AB equals CD objective. What do you think the odds are that a chaos level is right down in that area too? Come on, you. All right. And then does he have chaos in here? I don't know whether he does or not. Oh, he has all these fogging bombs. Oh, so Eddie's seeing something on the chart. He's jumping up and he's banging on the TV. I think Romanian TVs are made out of like steel or something. Fogging bomb. What's that? Yeah, there you go. Chaos. Look at all these fun things, eh? So there we go. 4669. And does he have 2.618 on here? Okay, so how did I do that? I did there to there. It's probably going the wrong way. Oh, there you go. There's 4669. All right, so there is 4669. So talk about confluence, eh? Now, I never, in fact, want to get into the business of saying the market will go here. But if the market does come down into here, and if the market does something like zing, 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 well, I got myself a reason to start thinking long again. Oh, so, this is the kind of, I would identify. In fact, I would probably even prefer, let's get a nice little, deeper pullback. Maybe even go like that. And like that. So you can sneak in right in that reload zone, right near that 4.669. And there's that 38.2 off the top of the entire range. So that's actually a really cool level if it did come into there to be hunting longs. Now, what this means to me, though, is that, we might have a couple days here where the US dollar comes down, or you may even have like the Fed doesn't raise a one full point, and right after the event, boom, there's a big drop on the dollar, and then it starts consolidating because he says, well, we're not done raising rates yet, and up she goes. So at the same time, too, I could definitely see, this is going to get a little messy now. But this is, in essence, a bull flag. So there to there to there. And if that's the case, just a continuation pattern, we probably want to come up somewhere up into that area. So I just completely eyeballed that. Did not do that very professionally. Just trying to, for the sake of the show, trying to do it quickly. But there to there, you get the idea. So what this tells me is, okay, I've got one potential trade location right down in here. And I've got another trade location. And ironically enough, if this actually played out the ABCD, then I think I would actually be thinking like this is a uh, buy the rumor, sell the news. So I'd be, let's watch how the US dollar index acts here over the next few trading sessions, because my hunch is that whatever's going to happen on the other side of the Fed, the market's going to do the exact opposite right now. Sort of that, buy the rumor, sell the news, sell the rumor, buy the news. So we'll keep an eye out for that going forward. I actually wanted to do just a quick overview, sort of, regardless of technical analysis, just try to get the feel for markets. I mean, clearly, US dollar index, that's still uppy. And it's uppy until it M's out. Now, should we crap out here and go through these lows, then the M starts coming in. Okay, we can start paying attention, looking for tops. I think it's probably a little dangerous to call a top here. Same thing on the euro. It was interesting reading Lagarde, obviously, is crapping her pants about inflation over here in Europe, and now they're talking about the Europeans want to raise interest rates. So maybe we might find that the US dollar sort of peters out as the Americans say, well, we've raised rates a whole bunch. Maybe we want to go on pause a bit. And the Europeans now play catch up with their interest rates to get them up into the US. I can see that happen. Crude oil as sort of our risk on proxy. Is it starting to sort of act normally? Um, I don't have any bottom here. Looks like at best this is a V bottom, so we should see a test of these lows. If they hold and we turn back up, then energy is a go. But really, I don't see it right now. And probably, let's see how we can do this thing. We can just go like that. Go ES one exclamation. We should see stocks. Yeah, you can sort of see crude oil rolling over. You can see stocks rolling over. Stocks actually look much, much worse than crude. So if we go, what do I want to do here? Let's hide that. There we go. So what I wanted to mention was stocks, which is kind of interesting. Think of the summer lows, right? We had kind of expected that. We expected a big dead cat bounce off of the summer lows. We expected a pullback against these lows. And then we actually expect the market to turn back up. And why do I say that? That was this image, right? There is this was the decennial report. If this market's going to act like a typical market that ends in the year two, you can see the summer bottom, summer rally, late summer, early fall pullback, huge pivot, massive rally to the upside. And if we left the market to its druthers, that's kind of what that looks like. Summer pivot, bottom, rally, pull back to test the lows. We're right now testing these lows, but I could very easily see the market hold this bottom and start to turn back up. Now, why would I say that? Ironically enough, if you go over to the breadth indicator, see if I can find this pretty quickly. So close. Well, we'll go with this one. Yeah. If you notice, and I started the conversation off because I love this histogram so damn much, that country funds almost oversold, not quite in the short term. Medium term, heavily oversold. The stock market, the S&P 500, not really oversold. 50 minus 56, man. I mean, we want to see like a minus 75 or higher, or I guess lower. Medium term, definitely oversold. So you can see how the stock market is actually oversold. I mean, and if it's not there now, it is very, very close. So going back to our stock market chart, there's the price action. I mean, do we have to A, B, C, D ultimately down into the bottom here? Maybe. You might find actually this is a bit of a trap because notice the selling volume is extremely light. A little suspicious there. And remember, in the stock market, we've got a big catalyst on the 21st. So, I've often told you guys that, where's the 21st? There it is right there. So, I've often told you guys if the market sells off into a Fed meeting, and look how damn close that is now, that's actually a good sign for the other side of the market because the market's going to be oversold. I mean, we can just throw on a really simple like momentum indicator, and my hunch is it's probably pretty wiped out. Let's see, how do we put an indicator on here? Is that one? No. Oh, indicators. I mean, I don't know, just do RSI. That does not look like the indicator list, though. That one? That's what I was trying to do. Hey, there we go. All right, you crack. Don't I come across as a crackhead? Anyway. Well, actually, it's not as bad as I thought. But RSI sitting right now, 38. They dump this over the next couple of days into that low. That will force the breadth indicator to basically go oversold. Remember, it's almost oversold, not quite. And the country funds almost oversold, not quite. So knock it down just a little bit more into that Fed meeting, make this oversold, and I think you got the makings of a bottom. I mean, there is the S&P 500. You can see the moving averages themselves of the breadth indicator. They're still pointed positive. I wouldn't be surprised if this has to come down and kiss this low, kind of like this kiss right here. Notice this is a really good example of a kiss right there. So we come down, we kiss the fast, kiss the slow, and then we turn back up. All the pieces look like they're falling into place there. So if you are interested, and of course, the total contrarian trade, if you are interested, I would keep a really, have your shopping list all ready, all the names that you want to buy. And by all means, if you want me to take a look at anything in particular, I can. But get your list ready. And what do you think the odds are if I draw reload zones of this range that we're coming down into those reload zones? I'd say probably pretty good. So reload zone, up, and it's backwards. Nice try. Nope, I made that mistake last time I did that. Then we got to go there. Yeah, look at that. So, and then let's do this one step further. We can go AB, and then clone that. CD. Oh, I think we're starting to get an image here. So notice that we often talk wicks and tails like to be eaten. So you could argue those tails right in there look like pretty juicy. And then we've also talked lots about candle body lows for trade location. I see a really juicy level right there, right off of those three candles. That's an empire. And notice how that's basically going to be 88.6. And that's going to be right down in that ABCD target window. So actually, that's where I'd be really interested. Now, this thing might just go right straight down here. It doesn't have to follow this course. And anyway, some sort of bottom there around that Fed announcement date window, I think makes perfect sense. Sell the rumor, buy the news. Anyway, we'll see how it goes. All right, so this was just going through our little short list, and of course, now we get to the only asset in the world that even matters, crypto. All right, you like that one? Yeah, actually, not really. We'll do a nice little uptrend here. It's getting a little dangerous, folks, right? We say that really you can't get uberly bearish of uberly. I don't know if that's a word or not. Anyway, uber bearish until you start getting market structure on the other side of this. And you can see, I mean, do you call that an M? Ugh, yuck. Is that an M? I don't know. You're really stretching it. Huge snapback, then a crap out here. So actually, the way I'd probably look at this is we're really waiting for, I think what's happening here now, this would probably be a really good straddle for the options people, is you're going to buy on a close above, and you want to use the clotheslines, that's fine by me, but I'll just use the intraday levels. So we want to buy on a move through 22,780. Is that what that says? I don't have my glasses. 22,780, eh? Yeah. Of course, that's going to make just the biggest W. So down, up, down, up. That might be stretching it a bit. But it's there. So we'll see. Stranger things have happened. Downside was that 18.5 level, and I still don't know how the fuck I got the fill. I haven't even looked at my account, but I was quite pleased when I was flying to Europe. I actually got filled on it. I was short from up in the 20,000 area before I left. I guess that's up in that area there. And I had an AOCO order to buy my position back at 18 and change, and TradingView gave me the fill, so I'm happy with that. If anything, I like this 3-bar fractal. Notice that. Actually, who can tell me what that pattern is? Let's see if anybody's paying attention. Have I put everybody to sleep? Eddie. Oh, he's still awake. What 3-bar pattern is this? Boom, boom, boom. Well, yeah. So interesting how the market actually gave us a buy signal level. And look how beep, we opened up and we crapped right out. So what a great analogy. That's why I love these empires. I'll tell you, if we went up through there, that would have been a great buy signal. So it's still trying to find its floor in here. I mean, the interesting thing, I suppose, is this is a reload zone. So boom, boom. Yeah, what a surprise. There's 78.6. This might turn into a double bottom, and if it does, then I would expect a nice rally up top. And probably, you've heard me, in fact, well, actually, that's an interesting conjecture. But anyway, yeah, interesting. Look how this low, if we rally back, candle body highs for trade location. I love that it's a trade location, 88.6, and basically you're risking this wick. It's a high anxiety trade, no doubt about it. This would be sort of you foregoing, well, you taking on information risk, but you're getting such a tight window against the highs that you're not taking on price risk. Now, what will, if the scenario is that this is the short, it'll rally up top here, and then you transition from price risk. In the case of the guy who hits that 88.6, you got excellent trade location, but you don't even know if the top is there. You have to sweat it out, sweat it out, sweat it out. Soon as the M comes in, then all the information risk guys, they all go, wow, that's incredible information. That thing is now saying that it's topped out, but you're now short from here, not here. So good analogy of the difference between information risk and price risk. Regardless, that's sort of crystal ball predicting. We'll cross that bridge when we come to it, if we even do. Right now, knee jerk reaction. Again, this is sort of like buy the rumor, sell the news. It is Sunday evening, or I guess, what is it? It's Sunday morning on the West Coast, Sunday afternoon here in Europe. So probably over the next 6, 8 hours, we're going to find out whether this almost, to be honest with you, this almost looks like a midpoint consolidation. So that means that we had big move down. Then you have this trading range established there to there. And if this is a continuation pattern, then it goes A, B, and then clone that. And we go C, D, all the way down here. Boom. So nobody wants to see that. In fact, actually, a couple of people just moaned when I did that. Sorry. I might also, and actually that's interesting too, because you notice that that dump down there into the Fed, everybody's freaking out. It's the end of the world. Cats and dogs are living together. All they did was they just went after this liquidity pool. So, if you don't know this, write it down in your journals. There is a ton of stop loss orders sitting right below this low here. And notice that ABCD pump move, or dump move, I suppose, will take us into those stop loss orders. Ding, 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 ding. They all get filled. The end of the world has happened. The interesting thing here is we might also play this pattern. So A to B. Let's maybe make this yellow. And we'll clone that. C to D. And so there's a price objective. So now, interestingly enough, friend, I would often do this in the past is I would go, that's an ABCD objective. That's an ABCD objective. So to me, this looks like a wicked target zone. Now, you might play the market bearishly here. Interesting how that was just straight up, straight down. It's almost like the market's not even giving you the opportunity to get in. I think 25 level would have been somewhere along here. So for me to actually trade this pattern and look for that short, I'd have to have the market counter trend rally, put in an M, and then break down, right? And then we have 3 higher or lower highs, and the bot setup starts to come alive. As it is right now, my hands are tied. There's not really much I can do. But I definitely like the idea that that's a pretty darn good looking little target window down there. And really, all you people here, if any of you are watching and you're learning, I mean, this is what you're here to learn how to do, right? And then if we do dump into this area and we've washed out all these weekend stops, where's that? Right? Liquidity pools, and then we went after the stops. They dump it into here. It's at this point right here that you want to start hunting for bullish divergences in your indicators, and you want to start hunting for bullish price structure. And, interesting, if this dump does happen, we pop on over to the breadth indicator and just say, what the heck's going on over there? Let's see, where are we? Notice crypto. I mean, this is an interesting image. When was the last time we saw this? This will have to be something that Josh, you and I have to monitor. You've got an M in the slow. So the medium term trend is like entrenched bearish, but you have a W in the fast. And our whole comment when the market was all the way down here and this was rolling over is that these moving averages are way too far apart. So they are coming back together again. My hunch is, for whatever it's worth, is that this can push up higher. It's going to kiss this slow moving average, and then it's probably going to get rejected back down. Kind of like when the fast was above this low and we pulled back, you notice the kiss, and then it has to ratchet back up away from there. So that's what I would expect. But what a fascinating image. That's not an image for you to get uber bullish. That's an image where, we need everybody just to calm down, just take a chill pill. The interesting thing about all of this, of course, is that I showed you, I don't know where the hell it is. Yeah, showed you the decennial report. But remember, we got Mr. Old Sleepy Joe. I don't know what the hell they call him. Let's see, how can I do that? Is he ready for? And it's funny, being in Portugal here right now. I haven't really been paying attention to too much to the political scene. Would be interesting to find out if Joe's dropped the ball or not recently. But I do see here that there's September. We're coming into the end of the month. Remember, we said breadth indicator. If we can just get some sort of short-term push lower, that will force the fast and the slow into oversold, and I think that's what forms our bottom here. Kind of like think of this as a swing low into the middle of October. That would not surprise me one bit. The problem with this image, of course, is that boom, we roll over into October, end of October, and into the U.S. election because people are convinced that I don't know, inflation's runaway again, lack of confidence in the U.S. government. I don't know. It's tough to say. Maybe the market interprets this that, oh, Jesus, Republicans have said something really stupid, and now the Democrats are going to come sweeping back into power, and we have another 2 years of unabated socialism, which wouldn't surprise me. We don't even want to talk about what the hell my country's doing and how socialist it's going. I've been saying all along, folks, if you are a capitalist and you believe in free markets and you believe in your ability and right to sort of write your own ticket and not have, some dickhead tell you that you got to eat insects or, you're not going to own anything and you're going to be happy because if you're not happy, you're going to be sent off to the concentration camp. Well, I mean, we want to see those Republicans win that election down in the States in November, please. If the Democrats win, oh boy, here comes another big whack of socialism. And then, the interesting thing about all of this is that the US dollar index itself is actually bankrupting the world economy. So I've made the argument all along that the banksters are not socialists. The banksters are die-hard capitalists. So I don't think that they want to see socialism do that well. That's the irony of all of this. They do have to reset the system. And that resetting the system is simply forcing all of us chumps to accept the fact that now, if you buy anything, you have to add another zero onto the end of the bill. It's just that simple. And I think, to all intents and purposes, they've gotten away with it. So the one way that, ironically enough, that they can prevent, because of course it's the U.S. dollar hegemony, and they, control the world's fate. And I was reading, I think I mentioned it a few minutes ago, that the dollar itself is absolutely killing these world currencies. There it is there. And by all means, I suppose if you're on the site, you can go grab this article from the library. Maybe I'll tweet it out if I can get to my Twitter feed. But what I see happening here is that as the dollar rises, and of course, all these countries have U.S. dollar denominated debt, they're getting absolutely killed. And really, this plays right into the banksters' desire. This is exactly what they wanted. And of course, it's exactly what happened in the last fear cycle, apex, and then heading into the following greed cycle. So it's absolutely cliche, folks. I don't know whether I can show you. Let's see if we can pull up that monthly chart, although I never know how this works. Where do we get monthlies? Yeah, see. Scroll down or up. That's what I was told to do. Hey, there we go. All right, so there's your monthly chart. I might even make the argument should be a big old Foggenbaum working off of even that whole range there. So if that's the case, let's see what that's projecting. Chaos. Boosh. Well, it's going the wrong direction. Nope. Oh, fudge. Right, so let's go down here, and then we'll go reverse, and still nothing. What am I doing wrong? Let's see, what numbers do they use? 4.669. Let's throw on 2.618. Okay. So I guess we're gonna have to reverse it manually. So there we go there, and there we go there. Hey, I like the look of that. All right, so that makes sense. Looks like the market really wants to test these old highs. So that's 116 and change. I don't see anything stopping that there. And then if we really break out, oh boy, all hell's gonna break loose. 150 on the US dollar, 4.669. That's what really should happen. And then if we go into some massive economic meltdown around the world, all the way up there at 219. Don't know whether I would really expect that, but I do like the idea that this 2669's got to be hit. And then we'll see whether 4669 comes in. Interesting how 877 right there lines up pretty well with the 2.6918. So that's probably a good example of confluence, which also lines up nicely with those old historic highs. So sure looks to me like the market wants that level up top there. So everything else, unfortunately, in that kind of environment is going to be weak. And we've talked about this ad nauseum. If you look at something like, interestingly enough, if we look at this from the political perspective, we actually see that the market actually wants to bottom into late October, early November, and that would be the U.S. dollar index ramping up, world economy going heavily into recession, and ironically enough, that would be sort of like a sell the rumor that oh my goodness, the Democrats going to lose power, but the market will like that, and you're going to get a monstrous rally out the other side. And that actually, I like that as a confirmation of Mr. Williams. So as it stands, the political message says that this thing has to go to new lows. We are in the process of testing those lows right now. So we are basically right in this window right here. And really, within a month and a half, we're going to find out who actually is in control of the US government going forward. Because keep in mind, Congress really controls the purse strings. So Congress controls government down in the States. And like I said, if the Republicans do come storming back, I think you're going to get that massive rally. But what the hell? We'll see what happens. Okay, so in the short term, before that election, I do like the idea. I don't know exactly what the path is that the market moves down, but I really do like the idea of the corn testing those lows. And we might even find that this is the opportunity where they really puke it out. I don't think that that really happens until the new year, but you can see there is this huge bear ABCD pattern forming. And what I'm just seeing is bear ABCD after bear ABCD after bear ABCD. And that's more confluence, folks. It's sort of like the market's trying to talk to us. Are we listening? And of course, a lot of people that are bullish, they don't want to hear this message. This is the worst message. So they'll actually just purposely tune me out. Anyway, so there's another ABCD. This one wants to take us all the way down into, let's see where this is going to take us. 11,000. Now, I like those kind of numbers because now we're finally starting to get back to cost of production numbers. Anyway, shake it. I do like the idea that the market's going to work its way down into this 4-year cycle trough. Once we do flush out, probably first quarter of next year, my hunch is, believe it or not, I think we rally. Let's see if I can do this. I think, and of course, this is pure opinion. Trade your setups. Brian's just talking out of his butt. We said that that end of October is our ultimate low. Maybe we have to do something like that. Then we're going to counter trend rally into the end of the year. Maybe it's back and forth, something like that. Actually, in fact, I don't mind an image that looks like that. Then, believe it or not, actually, I'm thinking that we have to make another new low into the winter, and then maybe we do something like that. I think that the market will break out next year, early next year, but it's going to be a trap. Oh, damn it. How do I move that over? Escape. Okay, and then go over here. Come on. Let's go. So I guess the point I'm trying to make is 2015 was a bottoming year. And I think 2020 or 33 or 33, 23, whatever the hell year is. I think that's going to be a bottoming year. And of course, you can go back on all my old tweets and stuff and see those charts. I think that we make our ultimate low here in the winter, but believe it or not, I think actually into the fall, and it's probably going to look something like this, but, whatever. But I think into the fall, we make our test of those lows. Then we turn up coming out of the fall and coming out of 2023, and we start getting ready for happening events and all those kind of fun things going forward. So there's your roadmap. Actually, I hate to say it, I think that this roadmap's a little bit generous. I think we probably actually have to be a bit lower. And I actually, honestly, and this is, you guys are going to hate this, but I love the idea. Whoops. Let's see, where were we? What did I just do? Ooh, look at that M now. Talk about sell the news, eh? Somebody was actually mentioning that yesterday. Now, where the hell did that damn Bitcoin chart go? Oh, darn it. Let's see if I can pull it back up here. All right, there it is. Let's see. How am I going to show you this? This should be a pretty higher time frame chart, eh? Oh, it's a daily. All right. So, when I look at this chart, what I see is I see a huge liquidity pool here. And the weird thing is that this all was done on just a great sort of orgy of chaos right through all this. I like the idea that the market has to come back and trade to there. Well, let's see where that is relative to where. And also, too, look at this. I mean, we could actually start drawing a big honking A, B, C, D's. That probably is down in that area. A, B, C, D. That would take us down in that area. So what is that number? 45,000 bucks. Interesting. What a coincidence. I really don't, and that would be 1/10 the high. Thought it was interesting in 2013, the rally peak was I think 1,300 bucks, and the ultimate bottom in 15 was like 150 bucks. So it's pretty darn close to 1/10. 88.6. Simon Dixon's always said 78.6 to 70 to 80%. You want to start buying. So we're basically in that window now. But I like the idea that we probe down into these areas, and I might even do something like there's your target zone, just simply because I really like candle body lows for a trade location. That actually, and the interesting thing is because we did make a higher high here, you can actually draw just a nice simple trend line. Boom, there it is. Really simple. Keep it simple, stupid. And that would be a nice dump into here. So I like the idea that we work our way. It's going to be kind of saucer bottomy. This might be a dump into that level there. That would not surprise me one bit. She does something like that. And then we basically don't look back once we leave 2023. And the why 2023? Like, what is it about that? And this is actually a great commentary on our marketing guru, who brought actually everybody at the meetup got a mouse pad with this image on it. Although I have no idea where it is. Is it on here? Yeah. The Benner cycle. Josh, just for to save time, Josh is saying, well, actually, here, let's go. Oh, not there, not there. So many buttons. Here, and then we'll go down here, and we'll go here. Josh put together by hand. Oh, this is the blog, but the PME feed is here, right? There we go. So Josh put this together himself. So proud of the work that he's done. Oops, not in there. I guess you got rid of that as a pinned tweet. So, wow, that was a million years ago that you posted that, eh? Oh, I keep teasing you. You know what's actually super cool is we'll go Benner cycle image, and we won't even reference. Oh, he's using DuckDuckGo. Isn't that funny? We'll do so we're gonna blow up his Andrea's computer here. Google.com. Start smoking. Uh-oh. Then we go Benner. And then we go images. And I love how this stuff, if I'm not mistaken, I think, yeah, there's a rationalinvestor.com. Yay. So super cool. So I've been talking about this ad nauseum. You guys probably get sick and tired of it. Mr. Benner lived a couple hundred years ago and actually mapped this out. Basically, it goes back all through I guess the 19th century. So we still have this to use until about 2059 or so. So we still got a good 20, 30 years left on this cycle. And I would imagine you could just extend this out into time. But bottom line here is Josh put this image together. It's now on the internet. And of course, you can see the blog. It's just fantastic stuff. So do yourself a favor. And of course, you could go into our swag shop. I suppose I could show that to you. And you can get where the hell is the image? There we go. You can get this on your mouse pad. Wouldn't that be cool? Anyway, you can see 2023. I think that's what that says. I don't know. My glasses on. Does that say 23 there? Yeah. So that's the trough. And if you followed Bitcoin cycles over the past few years, market loves to bottom about 6 months ahead of the halving event. And gee whiz, what a surprise. I think the halving event's like May 24. I think so, somewhere in that area. So 6 months ahead of that would be November 23, and that would absolutely be textbook Benner. So interesting how we had a stock market peak in January of 2020. So you can see Benner was calling for a top in 2019. A lot of times these top of the year, beginning of the following year, and that's kind of what I'm expecting to happen here. 15 was basically a sideways year. Think of 2015 as a massive W in Bitcoin. Just go look at the charts. Charts don't lie. And I would expect a similar situation this year. Let's see what we got here. So if I go, let's go weekly. And how am I going to do this? I guess we'll just go. March. All right. So then that means like October, November, our bottom comes in. What is it I wanted to show you? Oh, yeah, 2015. I don't think this cycle looks like the most recent cycle. Ironically enough, usually most people will look at the most recent cycle and that's what they will predict is going to happen. And it almost never works that way. So I do like the idea, especially with Elon doing his nonsense with Doge. I do like how similar 2000, I guess 12, 13. Is that it? No, I guess 14, 15. Look, relative to the price action of 2000. Where are we? 22, 23. So that is that image. That's actually what I think 2015 is going to look like. Eh, be interesting, somebody make a note, Great Del Moody, if you can make a note of this on the public feed, and let's come in like, say, November 2023, and let's see if this chart looks like this as 2023, the market just went sideways and puts in this massive, like, sort of monthly W. That's what I think is going to happen, folks. So anyway, only time will tell. Okay, so blah blah blah. I suppose we should probably, for posterity, since it just went through its merge, let's go look at Ethereum. Dun dun dun. I went and bought a whack of this on the dip there at $1,000. It went zipping up, and it missed my double order by like literally. Oh Jesus! I mean, honestly, it was something like $20. It missed my double level. Yeah, well, what can you do? I suppose looking at this image, something really jumps out at me. That's a bit concerning. All those David O fans out there in the world. Boom, boom, boom. We'll just ballpark this. Boom, 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 boom. So this is a bit of a bothersome image. I'm surprised I didn't see this before. Trying to line these silly levels up here. Come on, you. There we go. See if I can do the background. What's up? All right. Where's the background? There we go. See what happens if we do that. Nope. I don't know how to do the background image. See what happens if I. There we go. Oh, it's blue. Fancy. All right. And then what I would suggest you do is change this to a log scale. So how the hell do you do that, I wonder? There we go. Logarithmic. Boom. All right. Now, interesting. Look at the size of that bottom. Oh, man. That's what she says. They all seem to say that when they look at me. Jesus, look at the size of that guy's badunk a dunk. Anyway, maybe yes, maybe no. Interesting. Look at that. Now there is your battle point. So what price is that? Oh, Jesus, you guys do not want to see that. Look at that number. Ouch. and he's like, come to me, baby. Come to me. Come to me. So, and then we could probably even do like a nice little trend line, and probably the apex of these two lines where they conjunct is probably when the market bottoms. Look at that, it's so deep. All right, so gee whiz, that's who knows where the hell that is. Let's see. Well, man, that's tough. You can see how we jumped up violently off of this bottom, and we can only, it doesn't even look like we can come halfway, but you notice that this sort of was your last traffic area, and then it W'd out and turned back up. So look left. I sure like that level in there. Wyckoff check. Probably also too, if we try and do like a measured move. Yeah, we can do a few things here. So we'll go The head and shoulders objective is from the head down to the neckline, then clone that line and move that guy over there. So that's probably why this thing bottomed where it did there back in the spring. Beautiful. Do yourself a favor. Now, hopefully you looked at that and went, well, why on earth would I change this to a log chart? And now that head and shoulders setup should be a slam dunk reason why you want to use log charts. I mean, Jesus, that's, yeah, I could teach a course off that image. So there is that technical objective. That's kind of good to see. Really don't like though. It might be interesting to do. So let's go there to there, and then we will. Let's reverse that. We got all the foggy buggies there, so that's kind of cool. You know, I just smoked too much fucking crack. It causes me to make my fibs backwards. It's terrible. No, no. Let's just pretend Brian didn't say that, okay? You crazy kids are gonna get me into trouble with the law. Okay, where the hell did all the damn fibby bibs go? There they are. Okay, all right. So, oh yeah, because this is log, so it looks differently. Ooh, scary. Scary monsters, eh? All right, so there's, if we go off of the clotheslines, there's 2.618. If we go off the entire range, and actually, I guess maybe we need to go, where is that low? Jesus, I need my glasses. Can we turn some light on in here? Can barely see the screen. Please? Thank you, guys. Okay. Oh, I definitely like that level. Oh boy, there you go. So, right up, like liquidity pool. You've heard me say, look left. So, if the mark and the issue here, I would say, is keep in mind the fundamental story of this asset has fundamentally changed here. This is not the same asset. This asset right here is not the same asset that was over here. It is fundamentally a different asset. And between me, you, and the fence post, and I hate this about crypto, is I can look at something like this, and then I hear POS. POS to me means there is no value to these individual coins. That's a scary statement. Keep in mind there were a whole bunch. Now it's kind of apples and oranges. They were all, and let's see if we can even find the damn chart. The worst part about this stupid crypto space is you can't even get the damn charts going back years. Let's see if I can. I think Phoenix might have it. Stamp. Anyway, I did get and I tell everybody on the site we had a fun story. Do we do the DT? I don't think DT was around long enough. I think I probably have to look at this versus Bitcoin, believe it or not. I don't see where's stamp on here. Did I go right by it? Stamp. There's Mount Gox. Yeah, well, here we go. Whoops. There's a there. Oh, that's Bybit. Let's go. A. Yeah. Where's stamp? Stamp. I don't see stamp. Do you see stamp? Yeah, that'll just give us US dollars. And there it is there. But let's see. I don't think it has that much data. No. Anyway, what I wanted to show you guys is at the last cycle. And I used to know a guy in it. Geez, it broke my heart watching this happen. Ah, you piece of garbage. So frustrating, crypto. BTC. Let's go. Actually, I know it's on Shitterex, but Polo, probably Polo's pretty. Nope. Yeah, God damn it. Yeah, interesting how all the data seems to mysteriously just disappear. Drives you crazy. Kraken. Come on. There we go. Anyway, what year's that? Even this only goes back to 2019. Like, why do they do this to us, guys? So frustrating. Now, this is just Bitcoin, right? I mean, it should all of these sites should have this data going back forever. Can you see in the lounge? Is anybody barking at me? Oh, Brian, use this one. Brian, what are you doing? Use this one. Because I'd like to show you what ADA looked like the last cycle. I mean, it was super important information. And, just crazy nuts. And I think they do it on purpose because they don't want the public to see how bad these POS coins can just have their asses handed to them. So that one. Oh, hey, we might have something here. Let's see what we got. No, sons of bitches. Every single one. It's the same thing. That's frustrating. I mean, I know I can show you on my feed. Actually, maybe KuCoin. Let's see. No, look at that. None of them. Not a single one. This is like we're trying to study things like gold back in the 1970s, 1960s, and you just can't get a chart of it. Why? Because they don't want you to see it. So frustrating. How about Binance? Come on, Binance. Do your thing. Well, that's a little bit better. What does that say? 2018? Yeah. All right. So, we'll use this as an analogy. I remember one gentleman in Switzerland, a sweetheart. Actually, it's too bad I didn't see him in this Portugal meetup. But I went to Switzerland. We stood in front of Vitalik's office there in Zug, and actually we were harassing him. I think they was going to call the police because we were banging on the door so loud and nobody would answer. They were like, "Go away. We don't like you." Anyway, and I watched. And keep in mind, this is a weekly price chart. I think this is what does that say? W? Is that a weekly chart or a monthly chart? Oh, it's a weekly. Look how long. I mean, just look at this, people. This was absolute torture. And I remember watching this, right? From there all the way to its, you can see there's the W's. Where did it like break out in earnest and not really look back? 124 weeks. How many years is that? That's like 2.25 years. And I hate to say it, folks. I got a funny feeling we're in this kind of window right now. And the reason why this thing just kept going down and down and down and down was because it was POS. And I remember the people, they were all doing their master nodes and they were, collecting the staking coins and feeling like bosses. And the price of the asset just kept going down and down and down and down and down. Now that's versus Bitcoin. It would have been really nice to show you that versus USD because it looked even worse. Because ooh, fancy. So ADA, okay, which I have. What does that mean? Is that like that times PTC? What USD times USD like that? Yeah. Well, let's see what happens. And am I going to need brackets in there somewhere? Whoever's suggesting this. What I want to do is copy this so that which one's copy? I think that's it. All right, and then hit enter. Let's see what we get. Oh, nice. Okay, good. So there you go. There was the huge run up original, and this correction was just torture. I mean, ironically enough, if you could hold on there, 2020 ADI, it worked great, and you might find that Ethereum does the same thing. But what I'm worried about is I think actually we're sort of maybe in this leg right here, and we still got this leg to go. And interesting how ADA, I guess, and I'm not exactly sure what quote I'm looking at, but it's interesting how through that COVID meltdown, the whole nonsense garbage. Shouldn't we debate mortgaging our kids' future? Shut the fuck up, right? Give them the money, give them the money. And the whole market just pivoted off of that event. And actually, we did an interview with one of our OGs today. And he even said, well, honestly, I don't even really get interested in crypto until I see all the kids freaking out and just losing tons of money. And then it's like, okay, well, it's probably time to go back in and buy it. So there you go. That's a TRIOGer. And he says it's so matter of fact, so calm, no stress whatsoever, because he's been through the cycle now 2 or 3 times, and the guy's richer than Stink. So what the hell? Anyway. Okay, blah blah blah. So I'm a little bit concerned about, and thank you very much, whoever did that on YouTube's or in the was that in the lounge? It was a YouTube. So, all right, thank you very much. Appreciate that. So and then, oh Jesus, what the hell? What the hell just happened here? I mean, can anybody tell me? Is there a letter of the alphabet that just formed here? Look at that. That is ugly. Now, if we're really, really lucky, but I don't think we are. But if we are, then Eddie, you kill me. How are we doing on time, guys? Am I talking way too much? An hour and a half, eh? All right. So if we're really lucky, and I'm just gonna eyeball this, maybe it's a harmonic that looks something like that. All right. So we'll have to see how the market looks down here. And actually, we were even talking about this earlier, that sometimes you can actually get M's that form within W's, right? So this would be a good example. Up, down, up, and this implies that the harmonic is taken over. And this M here is not that big of a deal. But what it's going to mean, and we could even go A, B, C, D, little mini harmonic down in this area. And really, this harmonic, if it is for real, and of course, Stephen and Igor and all them, they'll correct me. I believe it should be 78.6, which would be sort of in that area. Is that an A, B, C, D? That brings the market down into there. I might even have to draw this harmonic off of that low. I mean, it's obviously highly, highly subjective. We'll cross that bridge when it comes to it. Would I short that right there? That's a tough one. Probably it's like a lower time frame trade setup versus a higher time frame trade setup. Yeah, you're coming in awfully late. You can see there's the double top up there. And if I'm not mistaken, I think that's roughly when the DI and the TRI breadth indicators and all that stuff started rolling over. Do you really want to come in on the short side down here now? I think you're coming a little bit late to the party. So it's kind of no man's land right now as far as I'm concerned. And then, as I said earlier, now that the merge is done, and it'd be interesting to see what exactly was the date of the merge. Was it this 12th or 11th? So it's 16th. So it actually just happened, eh? So it's right down in here. Interesting. I wonder if people thought sell the rumor, buy the news. Hey, there's a big fat W. Let's get in there and buy. And you notice that there was very little buying interest on that W. And that's a really good example of volume impetus, where you can actually see the volume trailing off here. It's not accelerating. So that breakout was never confirmed by volume. Sure enough, boosh, down we go, slam them all out. And there's a bit of volume coming in here, but it's not that much, eh? If this really, looks to me like, I'm just trying to see this. It's actually clearer to see on the TV than it is on my screen. You can see this volume bar right here. This is on this selling. Now, if the bears are really in control and dominating, you should this bar, and you should see more chunky, red, big, ugly, nasty bars that go and break this bar high and that bar high, right? And so the bear just continues to be in control. As we said, there was a potential bottom that tried to come in off of this W. But volume impetus, right? Volume always speaks volumes. You can see there was just no buying interest. The buyers just didn't show up. Sellers have shown up here. Sellers are in control of the market. Question here is this the end of that selling move? If we peter out here and then all of a sudden you start to see the sellers just disappear and we get lower and lower and lower red bars, then that's probably the end of the selling. And maybe this big harmonic pattern's legit. Probably also too, you could just take a quick boo. Let's see, how did I do that earlier? So we'll just throw on something like an RSI. And you just ask, are we oversold? Are we in divergence? So you can see it looks like the market's trying to get oversold here. Yeah, it is oversold. But you notice that RSI, look at that fly. Go away, fly. So the RSI is dipping. Notice here it's actually breaking below these lows. So, and keep in mind, this is a lower time frame chart. So until this thing actually starts divvying out and bottoming out, there is no bottom. And you can see price momentum. This looks very, very bearish right now. So I certainly wouldn't step in front of that. I get the impression that this is now a sell the news event. And the question I have, and I've had this all along forever, is how on earth do you put a value on one of these POS coins? And how ironic POS. And I actually, I actually like the idea that it was not an accident that they used the term POS. But anyway, we'll see how that goes. So there's your scenario. You can see momentum wise, this looks like a train wreck. Don't step in front of that. Probably we get down into reload zones, maybe candle body lows for trade location. Let's keep a real close eye on sort of 78.6 to 88.6, sort of that reload zone area. If you start to see divergence in your momentum indicators, and then we start to see W action, you can see this is what W action looks like. Then we got something to think about. But for the time being, this is hands off. Don't touch. So anyway, there you go. Okay, so I gave you a little bit of sort of summary of what the breadth indicators look like, what the broader market's thinking, U.S. dollar, sort of the, what Chair Powell and all that nonsense, and, Caesar, as Raf likes to call him, what they're doing, everything here. And then, of course, we talked a little bit about election years, decennial reports. I think everything's saying just cool your jets here. It's the middle of September. The election's over the beginning of November. So can you wait a month, month and a half? I think once that election's over, I think there'll be a very powerful rally out the other side of the market. So if you're chomping on the bit to spend money, when we get back into Vancouver and I hook back up with Paul, we could probably go through a bunch of charts in the crypto show and see some altcoins, see if we have any bottoms happening there. But I don't really see a hell of a lot to get excited about right now. All right. So with that said, that brings us basically to the end, as you heard earlier. I don't know whether you heard on the feed or not, but everybody's here. Hey, we're hungry, man. We gotta go to dinner. So why don't we do our big raffle? Ooh. What? What's up? All right. So what am I supposed to do here? Upper left-hand corner up here. Okay. Well, Jesus. This is with oh, it's just one person? Okay. Let's see how we do that. You go like that. Copy. Is that copy? I think that's that. And then down here. And we go right down to the bottom. Yeah, everybody heard that. I've never actually seen shit flipped. So that'll be interesting to see. All right, so Mr. Nestor, if you win, you've got to start flipping poo. There's an image for you. All right. Okay, so long and short of it here, this is a raffle for a seat in our education program. I think I showed you this earlier. If you don't win the raffle and you're still interested, I would highly encourage you to pop over to the actual page. Hey, there's Brian. Um, I don't know where the hell it is now, though, of course. Well, here, let's just scroll up. Which way? This way? So, 1, 2, 3. It's this one? Hey, it is right on. You guys are, oh, look at that. Actually, I'm officially overdue, right? I guess I should shut the hell up. All right, so I love this page, and actually, a lot of the video testimony and stuff. There's a good old Dav. Actually, I had a friend of Dav, sort of pseudo friend, and I talked with him this week, and I said, let's try and reach out to Dav and somehow try and bring him back into the fold where technical analysis does matter to him. That would be good. There's good old Sjord. All of you, in the Oliver de Hospital, got a great opportunity to meet and interact with Sjord. And I was talking to you a little bit about how he's working with Johnny Tastic. But come on over to this page. I mean, you can listen to me talk about the school program, but frankly speaking, the people that you should listen to are the students, because they paid the money for the program. And did they actually learn anything? Did they get value out of the program? Everything that they say here, I think, is just absolute gold. And I think it comes from the heart. And like I said, we did just a whole bunch of interviews today that will be up on social media shortly. And God, it's just beautiful. I mean, it's just beautiful listening to people who are very happy customers who've made a lot of money in crypto and who are feeling empowered and I'm just doing exactly what Jojo asked me to do. So with that said, let's see if we can change somebody's life. So somebody, I don't know, can we do it a drum roll? I don't know. There we go, and the winner is Ivor. All right, Ivor, you have 24 hours to get in touch with us. And actually, I don't even think the gentleman who won the last raffle, he never did get in touch with us. So, interesting. What the hell's your name? Josh. That's the senile old man that's starting to lose his marbles. Josh's buddy Ivor. Is it Ivor or is it Ivor? How do you pronounce his name? Ivor. Well, and if that's you, come on down. You just won the next, how's it going? On the Price is Right, on the TRI. There you go. So, Ivor, get off your butt and get your butt onto the site and let's put you to work. The registration, so we've noted that. Have you noted that? All right, maybe grab the email of the gentleman and right on. There you go. Way to go, Ivor. We're gonna change your life now, buddy, whether you like it or not. All right. I think on that note, what do you think, gang? Did we have a good conversation here today? I don't know. Did I impart any value onto the world? Sure hope so. PMA for the win. Go slow here, folks. A little bit dangerous. We always say they don't call it the fall for nothing. The world is in a very precarious place right now. We fully expect the Fed to keep raising rates. As Raf says, we got no business fighting the Fed. Go with the Fed, and as soon as they're done cranking up rates and they feel like they've got a handle on inflation, then actually that's probably when you're going to start seeing the market bottom and we can start going and buying a whole bunch of this crap looking for dead cat bounces. Go slowly here, folks, over the next few weeks. It's going to be a bit of tough sledding. All right. Have yourselves a great day. PMA for the win. Chris, anything I missed? No, you feeling pretty good? They're wanting what? All right. So before we head off, I think we just have to give a big shout out to this fantastic country. Got to say, I really like the people here and beautiful atmosphere. So 3, 2, 1, Portugal! And try some vodka. All right, all the best. And the only thing left for us to say is let's do it collectively. 3, 2, 1. Bye for now. Vodka.